Hey everyone, Alex here. If you're looking to start investing in the stock market but feeling overwhelmed by all the choices, you're in the right place. Today, we're breaking down the A10 best stocks to buy for beginners in 2025. Ah, these are not just any stocks. They are low-risk, high-growth picks that are perfect if you're just getting started. But here's the twist. Some of these stocks might actually surprise you. They're not the usual names you see plastered all over the internet. Stick around, because one of these picks has quietly outperformed even the biggest tech giants over the past few years. You definitely don't want to miss it. All right, let's kick things off with our first pick. 1. Microsoft, MSFT. Microsoft is not just a tech giant. It's practically a fortress when it comes to stability and consistent growth. Why? It's because of its diversified business model. From its Windows operating system to the Office suite, and most importantly, its cloud computing division, Azure. Azure is actually the second largest cloud provider globally, just behind Amazon's AWS. In fact, Azure's revenue has been growing at an impressive double-digit rate year after year. This consistent growth makes Microsoft a solid choice for beginners who want a reliable stock with the potential for substantial returns. But here's something most people overlook: Microsoft's move into AI and machine learning. With investments in OpenAI, the company is positioning itself as a leader in AI integration. This could be a game changer in the tech space, making Microsoft even more valuable in the years to come. Now you might be wondering, why not just go all in on Microsoft then? Well, diversification is key. You never want to put all your eggs in one basket. So let's move on to our next pick. 2. Apple, AAPL. I know. Apple might seem like an obvious choice, but hear me out. There's more to it than just iPhones. Apple is steadily transforming from a hardware company to a service-based company. Think about it. Apple Music, Apple TV+, iCloud. These services are becoming a bigger part of Apple's revenue every single year. And here's the kicker. The gross margins on services are significantly higher than on hardware. That means more profit per dollar earned, and that's what makes Apple not just a safe bet, but a smart one. Plus, Apple consistently pays dividends, which makes it an excellent pick for beginners looking for both growth and income. But why stop at just tech companies? There's another sector that's booming, and beginners should definitely take note. Let's talk about healthcare. 3. Johnson & Johnson, J&J. Healthcare stocks are often seen as boring, but that's precisely why they are great for beginners. Johnson & Johnson is not just a single company. It's a conglomerate with 3 strong pillars: pharmaceuticals, medical devices, and consumer health products. This diversity makes J&J remarkably resilient. Even when one segment faces challenges, the others can pick up the slack. Plus, they have a consistent track record of paying and increasing dividends. That kind of stability is gold for beginner investors who want steady, long-term growth. But hold on, we're not done yet. There's a trend emerging that you might not expect, and it's quietly creating wealth for those who see it coming. 4th, Nextra Energy, NEE. You might not think of energy when you think of growth stocks, but Nextra Energy is an exception. As one of the largest producers of renewable energy, Nextra is poised to benefit from the global shift towards sustainability. With governments worldwide pushing for cleaner energy sources, NextEra's solar and wind assets are becoming increasingly valuable. Plus, utility companies tend to be more stable, making this stock a unique blend of growth and security. Speaking of security, there's one more sector that beginners often overlook, but it's been a consistent winner over decades. 5. The Coca-Cola Company, KO. Yes, Coca-Cola. You might be thinking, how can a soft drink company be a top pick in 2025? Well, it's simple. Coca-Cola has mastered brand loyalty and product diversification. From soft drinks to bottled water and sports drinks, Coca-Cola's portfolio spans the globe. The key here is dividend reliability. Coca-Cola has been paying dividends for over a century and has increased its payout for more than 50 consecutive years. That's practically unheard of in today's volatile market. But here's something even more interesting. Coca-Cola has been making strategic moves into healthier drink options and diversifying its portfolio. This forward-thinking approach keeps the brand relevant, even as consumer preferences shift. Now you might be wondering, what's next? We've covered tech, healthcare, energy, and consumer staples. But there's one more category that might surprise you, and it's been growing faster than most people realize. Hang tight, because coming up, we're diving into a company that's quietly building an empire in an unexpected industry. Trust me, you'll want to know about this one. All right, let's keep going. 6. Visa, V. Now here's a company that might not seem flashy, but it's a powerhouse when it comes to consistent growth. Visa. You might think of Visa as just a credit card company, but it's much more than that. Visa is essentially a toll collector for global financial transactions. Every time someone swipes a Visa card, the company makes money, without actually lending any of it. Why is this significant? It means Visa isn't exposed to credit risk like banks are. Instead, it just takes a small fee for processing transactions. And with the world moving more towards cashless payments, Visa's revenue is set to grow steadily. But here's something you might not know. Visa is heavily investing in blockchain and digital payment technologies. That means they're not just riding the cashless wave, they're actively shaping the future of transactions. This is what makes Visa a great beginner stock. It's both stable and innovative. Now, speaking of innovative companies, let's move on to one that's set to change how we eat. 7. Beyond Meat, BYND. Plant-based meat alternatives are more than just a fad. They're becoming a mainstream option as people become more health-conscious and environmentally aware. Beyond Meat has positioned itself as a leader in this space, partnering with major fast food chains and grocery stores worldwide. Here's why it's intriguing. While Beyond Meat is still in its growth phase, its brand recognition and product innovation make it a potential long-term winner. Plus, as production costs decrease and consumer demand increases, profitability becomes more achievable. But it's not without risks. The stock can be volatile, which is why it's crucial to consider it as part of a diversified portfolio. Still, for beginners looking for a bit of exposure to the plant-based trend, it's worth keeping an eye on. Now, from plant-based to tech again, let's talk about a company that's becoming essential in our daily digital lives. 8. Alphabet GOOGL. You might know Alphabet as the parent company of Google, but it's much more than just a search engine giant. Alphabet owns YouTube, Android, and numerous cutting-edge tech projects. Plus, they have one of the strongest advertising ecosystems in the world. Here's where it gets interesting. Google Cloud is rapidly growing and becoming a significant part of Alphabet's revenue. This diversification means Alphabet isn't just dependent on ad revenue. They're also investing heavily in AI, autonomous vehicles through Waymo and various moonshot projects. This makes Alphabet not just a tech stock, but a tech conglomerate, one that has proven its resilience through various market cycles. For beginners, this means owning a piece of multiple future technologies while still relying on the stability of core businesses. But let's not forget about diversification. While tech stocks are exciting, there's one more area that could offer surprising returns. 9. Procter & Gamble, PG. Why would a consumer goods company make the list? Simple. P&G owns household brands that people use daily, like Tide, Gillette, and Pampers. These aren't luxury items, they're essentials, which means they tend to perform well even during economic downturns. Plus, P&G has a stellar track record of dividend payments, which makes it a fantastic option for those looking to build a stable, income-generating portfolio. Here's a fact that might surprise you. P&G's innovation in product formulations and sustainable packaging is keeping the brand fresh and relevant, even as consumer expectations evolve. It's this blend of stability and forward thinking that makes P&G a beginner-friendly choice. Now, we've talked about tech, energy, healthcare, and consumer goods. But what about the industry that's been quietly booming? 10. Tesla, TSLA. Now I know what you're thinking. Isn't Tesla too risky for beginners? Yes and no. While Tesla's stock price can be volatile, the company itself has transformed the automotive industry and is leading the way in electric vehicles, battery technology, and even solar energy. What makes Tesla intriguing for beginners is its cult-like brand loyalty and continuous innovation. Whether it's self-driving tech or advancements in battery efficiency, Tesla is not just a car company. It's an energy and technology leader. But here's the kicker. Tesla's focus on energy storage solutions could end up being just as revolutionary as its cars. As the world moves towards green energy, Tesla's diversified tech portfolio could secure its place as a long-term growth stock. Now you might be wondering, what's the smartest way to invest in these stocks as a beginner? Should you buy them individually or through an ETF? And how much of your portfolio should you allocate to each one? That's exactly what we'll cover in our next video. Make sure you subscribe and hit the notification bell so you don't miss out. You'll learn how to build a balanced portfolio with these stocks and maximize your potential returns. Remember, investing isn't about chasing hype. It's about building wealth fundamentally. See you in the next one.